Hi Chirag. Firstly, I think many congratulations. The Quantum Nifty 50 ETF Fund of Fund, RNFO, is finally out.
Thank you so much.
Yeah, but before we jump on to knowing more about the fund, tell us more about the asset allocation approach that Quantum follows.
Sure. As you would know that Quantum is a investor first fund house, and given that we want to launch simple funds that help investors build solutions for themselves in asset allocation framework which help them achieve financial goals easily. So the new fund is a move to further that agenda.
Okay.
And if you look at the 12-20-80 solution, that is something that we have seen that has worked very well for investors, be it any kind of market environment, be it a global financial crisis, be it the COVID crisis, or be it anything that's related to the ups and downs movements of the economy and the markets. It has helped investors to kind of not deviate from their investment journey and still reach their financial goals easily. So that 12-20-80 solution is like 12 months of your expenses, keep very safe, and any money after that is split 20 into gold and 80 into equities. So it is very simple for people to understand, and they can use the various funds as building blocks to build that 12-20-80 solution.
Okay, so you definitely recommend everyone to be asset allocated.
Absolutely, asset allocation is paramount. You have to begin there, and then you can build those allocations the way you like it.
All right, thanks so much for that. Now let's talk a little about the fund. What's unique about the NFO?
It's Quantum Nifty 50 ETF Fund of Funds. This is the first of its kind in India. There is no other fund that has a fund of fund on a Nifty 50 ETF. So how it works, Nifty ETF Fund of Funds is a wrapper around the Nifty 50 ETF.
That's the existing fund?
Yes, that's the existing fund with a 14-year track record.
Okay.
So the fund of fund will invest in the ETF, and ETF will invest in the 50 stocks constituting the Nifty 50. So you get exposure to the Nifty 50 through the ETF, and the fund of fund will buy that ETF.
Oh, that's interesting.
So why we did that? It's not complex. It's very easy. So what you're trying to do is you're marrying convenience and efficiency both together. ETF by the structure are very efficient vehicles, but at the same time investors are used to investing like the mutual fund way. So they want that convenience of a mutual fund and the efficiency of the ETF, which we are trying to build into this product.
Okay.
So I think it's a fabulous way for investors. Also, it offers convenience in form of SIPs. People can do SIP, systematic investment plan, write a check for 5-10 years and build their journey of investing in Nifty 50 over a period of time.
So tell me, which kind of investors should, be eyeing on this fund? Who should be investing in this fund?
Sure. To begin with, again, with asset allocation, investors have two choices to build that asset allocation framework, right? Either you go the active way or you go the passive way. All those investors who have a preference towards passive, who wants to have more control, who wants to have that core satellite portfolios, those kind of approaches that are there in market today, those investors can choose the Nifty 50 ETF Fund of Fund as a core allocation within the 80% allocation of equities. So if you have to put 80 into equities, then 85 of that 80 should go in the Nifty ETF Fund of Funds, because that becomes your core allocation. You can add a ESG fund along with it to complete that 100%, but that is how you use the core allocation to be the Nifty 50 ETF Fund of Funds. So if you want to go the passive way, build your equity allocation, then this could be core part of your portfolio. So any investors who have that preference, then clearly use this as a core of their portfolio and build their allocation over a period of time.
All right, thanks. And if you were an investor, what would be your, 3 reasons to invest in this fund?
So if you look at this fund, it's firstly the first of its kind. There is no other alternative today available. It gives me great convenience to build my equity allocation over a period of time. So SIP is another great reason why I'll do it. It is a low-cost vehicle to get exposure to Nifty because the convenience that I'm getting is coming at a very low cost. Okay. So it helps me to build that allocation in a low-cost manner, and it is a very efficient vehicle. So if I want market-like returns, right? If I want Nifty, what is the market doing, and don't want to fall into choosing active manager and seeing how do I select schemes and just want asset allocation and market-linked returns, then this is a great product for me. So convenience, low cost, and tracking the markets
Yeah.
efficiently.
Yeah.
Those are three reasons why I go for this fund.
So from investor standpoint, Chirag, what are the different avenues available to invest in the Nifty 50, and which one would you recommend and why?
Sure. So for investing in a Nifty 50 from a mutual fund perspective, there are three ways to invest. One is the ETF on the Nifty 50, one is a fund of fund on the Nifty 50 ETF, and third is an index fund on the Nifty 50 that tracks the Nifty 50. When you look at ETF, it is one of the most efficient vehicles of buying the Nifty 50, but they are not very convenient. Like especially if I want to do a SIP for 2 years, 5 years, 10 years, it's very, very inconvenient. I have to remind myself, go on the online trading portal myself. So I get into calls of whether should I buy, should I not buy. So discipline is not there in that form. If you look at the index fund by structure are not very efficient, and therefore they could be prone to very high tracking errors.
Okay.
And cost also for an index fund is usually higher than an ETF. So if you look at, these are two different extremes, and somewhere in between is the fund of funds. So fund of funds has the efficiency of the ETF because it invests in the ETF, and has a convenience of mutual fund because you can invest like a mutual fund. So it's a fabulous way which gets best of both the worlds.
Okay.
And therefore, a fund of fund based on the Nifty 50 ETF is what I would recommend investors if they want to take exposure and build their passive allocation through the Nifty 50. Then this is a great way which brings efficiency and convenience together, and you can begin your investment journey by signing checks for 5, 10, 15 years of time frame and build your equity allocation over a period of time.
Okay, so fund of fund it is.
Absolutely. It's a
Thanks.
clear winner.
Yeah, thanks.
Thank you.
Okay, Chirag, lastly, how do I get started if I have to invest in this fund? Which platforms can I go to?
So this really is a hassle-free way to invest in Nifty, to take exposure to Nifty, right? So there are various ways where you can invest lump sum, you can do an SIP in this fund, whatever your choice of investing is. You don't even need a demat account, so you can invest like you would invest in any other normal mutual fund through logging on to Quantum Mutual Fund website. Either you go to any registered investment advisor website, or you go to a financial advisor. You can go any ways which allow investing in mutual funds. In all ways you can invest in this fund. So it's a very hassle-free way. It adds to the convenience factor because mutual funds, people are used to investing in mutual funds, and this is no different than that.
Okay.
So it's very, very simple.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.